Hey guys, Omar here, broker and CEO of Alden Mortgage and Omar Realty. So strippers, pop locking it, hitting that pole, doing your thing. Can you get a mortgage if you're a stripper? Absolutely, that's what I'm here for. Actually, you know, this is actually just not just for strippers. This is for any gig worker, freelancer, makeup artist, or anything like that. I just thought it'd be a funny little title. But let's go ahead and get on with exactly what the requirements are for strippers loans. Stripper loan? Yeah. So let's go ahead and get on with it. So any single home that you get, okay, you could do primary, you could do second home. Second home will be 6 months. You could do your you could do an investment oh shit, I left the door open. Whatever. You could do an investment property, you could do whatever your little heart desires. And the good thing is that you could actually go and do 90% loan to value, right? So on I got my little quick cheat sheet here, because you know what, trying to understand these guidelines is like they change so much so often that you have to keep up. So this is in 2022, we're in January. I gotta fix that. That's I gotta pull over and I gotta do something about that. Now, just to go ahead and clarify, okay, the only reason why I'm even doing this specifically is because there was a young lady that we have that was in that profession, and she came over to us and she was like, hey, can you guys get me pre-approved? And I was like, of course, why not? I don't understand. But there is a little bit of a caveat to this. There is a little bit of hurdles that we had to get across. So I'm gonna go ahead and mention a lot of those in this video. This is actually the property we're at right now. We're just finalizing some of the things, making sure some of the things that she was done. She's a very successful young lady, but you know, everybody deserves a chance to go ahead and get a mortgage. And if the information is not in front of you and you don't know, and that's what I'm here for. I'm here to let you know that anything is possible. So I'm gonna go down each and every one of these requirements so you know exactly what you need in order to go ahead and get approved. And I do apologize, it is windy as shit. So what I'm gonna go ahead and do is first we're gonna go ahead and go loan to value, okay? So loan to value is how much loan can you get according to the value of the house. So if you have a 720 credit score, now these are just rough guidelines, okay? So there are other things that we have to take a look at. The most important thing is that you have to file your taxes. Okay, I know cash is a very thing. We do have a cash loan program, which I'll go ahead and do another video on bank statement loans and cash asset qualifiers, asset dissipation, depending on how much money you have. These type of things we'll go ahead and offer, but you could go up to $4 million on this house at 720 credit score. On 720 credit score, mind you though, if you're just like popping and dropping like a champ and you're making ton money, and you could go ahead and get approved for that $4 million range, it is a 75% loan to value on that home. But we can go down to 620 credit score. Now this is going to be on your primary residence, and it is going to be at 620 credit score, which is the lowest that we could actually go up down to 600 credit score, but it will be a 60% loan to value. So that is kind of safe. You have to come up with 40% down payment. But if you are managed to get into the 660 credit score range, you could get up to 10% down, which will put you at a 90% loan to value. And that will go ahead and be, you know, your reserve will probably be technically, so you will need a reserve. Reserve is just like, you know, how much money you'll have in your account to go ahead and qualify you for, you know, principal, interest, mortgage, insurance, everything that is associated with the loan, to go ahead and get you. Okay, so what are reserves? Reserves is just how much mortgage, insurance, and principal, interest that you will have to have in your bank account that is excluding your down payment. So for instance, let's say you are going up to $1 million, right? You want to buy $1 million. You're gonna have to have at least 3 months in reserve on your principal. So let's say hypothetically your mortgage payments are $4,000 a month. You're gonna need an extra $12,000 a month in reserves, excluding the amount that you are gonna go ahead and put in down payment. Now, what we can do is we could also go to the loan products that we have available. We could go 30-year fixed. You could do 40-year interest only. This can be on a investment property if you're willing to go ahead and do that. If you want to do this as a primary, if you want to do this as a second home. And mind you, this is all going to be between 1 to 4 units. Anything above that will go ahead and be classified as commercial, and that's in its own other world. We'll have to go ahead and maybe go to a P&L loan, which is your profit and loss loan. I'm just randomly shooting up jargon that you probably won't know, and if some of you do, you're pretty savvy, or you're a business owner yourself and you know what a P&L is and you know how we go ahead and read that. And I apologize for the win. You gotta shoot these videos when you gotta shoot these videos. Now, when it comes to job types, when it comes to gig workers, freelancers, you know, you are gonna get paid as a 1099. You are going to, now this is the biggest hurdle that we have to come across. Now you are, let me stand up, my ass is hurting a little bit. So you are gonna have to have a 1099. Now the 1099, and you are gonna have to file your taxes. You are gonna have to pay for taxes, get yourself a good CPA to teach you to go ahead and write off as much as you can. So, you know, you have a ton of write-offs. Strippers, models, business owners, whatever you are, I don't care what it is, you are always going to be on a level to where you get to write off a lot of things, because in essence what you are a business owner. You are the business of yourself. You are providing a service, and that service is going to go ahead and accommodate whatever money that you're getting from it. Now, who could qualify for this? Now, the qualification, of course, if you're a U.S. citizen, this is all based off of citizenship, because, you know, this is something that we have to go ahead and ask. Now, your citizenship will go ahead and be, well, if you're a U.S. citizen, if you're a permanent resident alien, that's like if you got naturalized or something like that. If you are a non-permanent resident, if you have a visa that is E, G, H, the L, O, P, and TN. Yeah, I think that's pretty much all of it. First-time home buyers, you could go ahead and use that. We could use the FHA home buyer qualification on that. You could go all the way down to like 2%, 3%, 3.5%. You could get down payment assistance on that too. But this is gonna be a 1099, which this is gonna be the most easiest way to go through it. You can go down FHA, you can go down conventional if you want. You are gonna still have to do your 1099, and you're still gonna have to do a lot of those other things as far as your taxes goes, because we still have to justify the mortgage payments. We're still gonna have to justify the income coming in. We're still gonna have to go ahead and see how much you have. But this is basically freelancing, because we have inconsistencies in your income, right? So you might be doing a lot for a week. Maybe you don't, you take off in another week. Maybe you have $10,000 in one week and you only make $1,000 the next week. So, you know, we have to calculate these inconsistencies, so that's why we justify it with these freelance loan programs. Now, another thing that most people don't tell you, you're gonna need credit cards. Please, for the love of God, go get credit cards. Pay off whatever you can, and just... All right, sorry for the cutoff, but we just, you know, finished up with my client. She's happy, everything is hunky-dory, but back to it, trade lines. Okay, so open up credit cards. You need credit cards. Credit cards are super important, because we have to see a repayment process. We have to be able to see, okay, is, you know, you have 0 credit cards, but you want to go ahead and get qualified for a mortgage. It's the same like as a car, right? Or the same as like any type of line of credit that you're looking for. Somebody has to see that you are making repayments in order for you to go ahead and get qualified. So you need at least a minimum of 3 trade lines, and you must have at least 24 months worth of credit history. The trade line does not have to be open, okay? It does not have to be open. Hypothetically, though, have it open, okay? Go get yourself like a, I don't know, American Express credit card, or go get yourself a Chase or Wells Fargo, whoever you're doing it with. Grab at least 3 of them. 4 would be even better, and just use it for your regular everyday expenses. Use it for, like, you know, your food, your clothes, your pencils, because pencils. If anybody uses pencils anymore, but these are things that you want to go ahead and use. So don't put money in a bank account and be like, okay, I'm just going to use a debit card and I'm just going to go from there. It doesn't make any sense. It doesn't benefit you, or it doesn't benefit anybody. So you're like, Omar, I don't want to pay interest rate on all of it. Well, that's fine. Go pay it off. You get, like, some of them you get 3 to 5% cash rewards on your credit card. So you're going to build up your line of credit, you're going to build everything up, and then you're going to go ahead and show that you can pay it off, and then at the end of it, your credit is just going to start booming. You're going to have like 700-800 credit score before you even know it. So don't use a debit card. Debit cards are stupid. I don't understand why anybody would use a debit card. I don't know why anybody even comes, like, just take a debit card, go throw it in the trash, okay?
Take that money that you make and put it towards your credit card. Put in a positive balance on it. This is something very common that people for some reason don't do. Your money's not going anywhere. You're still going to be spending it, except this way you're going to accumulate points. You're going to accumulate, and by points what I mean is that, well, A, you could accumulate points, but B, you're also going to accumulate a line of credit that's going to go ahead and help you out. So your credit score, so the minimum credit score, like I stated, is 600 credit score, but I highly recommend that you don't do the 600 credit score. So 600 credit score, because your loan to value is still going to be like between 60 and 70%. But unless you have the money to go ahead and do that, then that's fine. You could go ahead and go down that route. But I always say, the less money out of pocket, the better off it is for you, and you could go ahead and just do whatever your little heart desires with the other 20% that you would have normally have put down. Do the 10%. 10% will make you a happy-go-lucky camper. But the most important thing out of all of this that you could possibly get is going to be, do not file taxes. Do not take all that credit and or all that cash and just not touch it, because once you do that, because I know it's very easy, but like, you know what, I made that money, I'm not gonna, it's cash, it's a cash business, I don't need to. But if you want to get a house, if you want to go buy something, well, that's another thing. Unless you want to rent, then that's cool too. There's some really sick ass houses up on the mountains and high rises and all this. You could do that, but till when are you gonna keep renting? Everybody, have an asset, and then later on, whenever you say you want to do an investment property, you want to do a second home, you want to do something, we have a history of what you were able to afford, and then you could go ahead and get whatever it is that you want to get after that, because it's not going to be that difficult. This is mostly for first-time home buyers, right? First-time home buyers, if you want to go ahead and purchase a house and you are in this line of work, whether it's gig stripping, makeup, or for any freelance type of work, this is what's going to go ahead and be needed. And then, so the next part of it is going to be your housing payment history. Now, don't worry about the housing payment history. Just make sure you're renting someplace. We could verify your rent, because we're going to go ahead and do what's called a VOR, verification of rent. And we're going to just get the history on that. Be on time. Okay? Be on time. Don't be like, okay, I forgot, it's past the 3rd and I didn't pay my rent. If you want to get a house, we're going to go ahead and need to go down that route. So now we're going to go with the things that are going to kind of maybe possibly hurt us, okay? Bankruptcy, if you want to go to FHA, if we end up going at FHA route, which we can, but this is what's called a non-qualified mortgage, because when you're this heavy on cash and you have inconsistencies with your deposits, like, you could make, when it comes to FHA and conventional, they're going to need actual, like, okay, if you made like 30,000, and these are just numbers I'm just rambling off, okay? If you made 30,000 this year and you made 70,000 the year before, it's going to be there's a big discrepancy there, right? There's a big like gap, like, okay, you made 70,000 here, you made 30,000 there, how are you gonna, like, how much do they really make? With this program, we actually only need just 1 year. So if you had a really rocking year, then we could just go ahead and go down that route. But if you had a bankruptcy, a foreclosure, short sale, a pre-foreclosure, any judgments against you, collections, charge-offs, child support or whatever, these are things that are going to make it a little bit more difficult. And you know watching this video, I don't have to tell you, I don't have to ramble all of it. You know what derogatory mark is, you know what's the bad part of it, you know what you did, and you know what you have to go ahead and do to get yourself out of it. Charge-offs are okay, so you do not need to pay off your charge-offs. Leave those alone. But we have medical collections. Anything that's in collections under $1,000 is okay too. But the less you have, the easier it is for us to go ahead and qualify you. The easier it is for us to go ahead, and the less we have to explain, the better off we are. I would rather us just to have to explain the income part of it and show the taxes and calculate it that way, then okay, we have to go ahead and do this, and this is like, we have these derogatory marks that we have to, so we want to get the pre-approval process as quickly as possible and not be like, okay, we need to do XYZ before we go ahead and get to the end goal. So make sure you pay off whatever you can, get on a payment plan if you can, if you are in collections and you just don't have the money to pay it all off, so at least we could get that off of a collections it's not really off for collections, but at least we could show a repayment process is going to happen, and then we need at least like 3 months worth of payments to go ahead and get you onto this type of loan program. Now your debt to income ratio is going to be at about 50%. We could go up to 55%. Debt to income just means how much total debt do we have, including credit cards, car payments, you know, whatever debt that you have that is recurring, credit cards, whatever it is, right? That is recurring. So like, let's say you went and bought yourself a $20,000 card, that is going to be put on your back end ratios, right? Your back end debt. We could go up to 50%. Hypothetically, we want to be at 50%, and now this is going to be gross. Gross just means that everything you made beforehand. Okay, so your CPA and the person that's doing your taxes, they're going to go ahead and build up a P&L, a profit and loss. You're going to do your taxes. You're going to do all that stuff. You're going to write off a bunch of shit that you want to go ahead and write off. And then after you go ahead and write it off, we go ahead, but we look at it beforehand, right? We look at it like, okay, you brought in $100,000 in cash. We're going to go ahead and count the $100,000 in cash. So, but be careful, okay? Don't go house poor. Don't say, you know what, I'm going to go work at this new club, or I'm going to go do this, or I'm going to go ahead and pick up triple shifts at Uber, or I'm going to go and do 20 weddings as a freelance makeup artist, or whatever it is, and I'm just going to kill it. And this, don't do that, okay? Don't do the what if. Be very smart with your money, because this house is going to stay there, the debt is going to stay there, and then you have to put money. You got to put a little skin in the game, right? You have to put a little bit of money in there to go ahead and say, you know what, I'm going to put my 10%, my 20%, whatever percent it is. You don't want to lose that. That's money you worked your ass off for. And in some cases, it's like, you know, literally you worked your ass off for it. But you don't want to throw that money away. Now, just product eligibility, you just make sure that you have 1099s to cover at least the calendar year. So let's say, for instance, we're in 2022 right now. It's January. We want to make sure that 2021 is it 2021? No, we're doing 2021 this year. 2020 is actually filed. 2020 is actually filed. The documentations that you could go ahead and get, we could get year-to-date income with 60 days of no date. So that just means, like, we need to know how much you made, and of course we could do this with your statements, with your 1099, with your P&L, audited, unaudited. If it's unaudited, that just your CPA will know what we're talking about. So if you go to your CPA, if you have one, I don't do the CPA stuff, so that's not my thing. But you could go talk to your CPA and make sure that they give you an audited P&L. So this goes back to, now we're going to go back to the income calculations. Okay, so the income calculations, now we have a couple of different options to it. Just know, I don't want to get too much in detail because this is going to be a forever type of video. Just remember that you need to file your taxes, and you need a 1099. Okay, you need at least 2 years 1099, so we can kind of justify what we're asking for. You could do an expense ratio, which I'm not going to get into that. If you want, link in the description below. Okay, I will get you up to 50% commission rebate on your house. Sick. That's money post-closing that I could go ahead and hook you up with. And then plus I could go ahead and get you this type of mortgage. So if you are interested in it, just go ahead and go down there, submit your application. You could go ahead and shoot me an email, go on Instagram, follow me, shoot me a DM, whatever you want to do. We could go over your situation, we could go over your scenario, we could go ahead and see what we have to do, and help you out the best way that I possibly can. Of course, P&L statement, that's going to be your option too, which we already covered. I think I killed the P&L thing already. You can get a co-borrower if you really need it. Let's try to work with what you got, and then we'll go ahead and go from there. But the co-borrow option on this type of loan product is available. You do have other income that you could go ahead and qualify. If this is not your first house, it's your secondary house or whatever it is, you could use rental income. Now, whenever you're doing rental income, there is a 25% loss rate. Now, the 25% loss rate is like, okay, you bring in $2,000 a month in mortgage, in rental income. That 25% is going to count for, expenses, for rent loss, vacancy loss, whatever it might be. We do a 25% calculation on that. So 25% hit. So if you're doing $2,000 a month, just go ahead and calculate it at $1,500 a month. $1,500 a month, we'll go ahead and calculate. Other incomes. Now, with the other incomes, now if you do get Social Security, okay, now this is hypothetical. I don't know why you would get Social Security and you could just, pop that poll like a champ. I mean, you can. I mean, OnlyFans. I'm sure there's somebody out there that's geriatric and is just popping it like it's hot, collecting that Social Security and getting making it rain on them. You could totally do that. If you get a pension, if you have alimony, you have child support, we need documentation to go ahead and support all of that, which is easy to get. If you get child support, or alimony or anything, there's court documents, and then we'll need your bank statements that shows those deposits have been made. Now, when it comes to reserves, we could use asset accounts. Now, you're going to hear asset accounts, or you're going to hear, let me go ahead and see how much assets you have in whatever account that you might have. Every single mortgage professional is going to ask for you, brokers, MLOs, which are mortgage loan originators, whoever it is, your banker, your broker. Brokers are better. I'm way cooler. Who the hell gives a damn about one of those banks? But anywho, you could use, if you take some money and you put it in you put it in like in an IRA or a CD, or you have a 401k, or you have somebody that's doing some sort of investment plan for you, which is very smart. You should definitely, working that pole is not going to be forever. It's not. It could. It could last a really, really long time. Especially with plastic surgery, the way that they're doing it. Have you seen those Kardashian chicks? That's not even right. It's not even normal. Except for the oldest one. I think it's like the Kim one. She's been holding up really well. She was pretty before, right? But the other one, son of a bitch. Whatever. I only know that because my wife watches that ridiculous show. But they're very, very, very smart with what they do. The way that they are able to exploit, they're in essence a media company. That's all they are. So when people are like, oh, you did this and you did that, what they have done as far as their media is and their social platforms have gone is without a doubt one of the most impressive things I've ever seen in my entire life. There is you could talk shit all you want on those people. Any one of these reality shows, whether it's those housewife shows or whether it's like these other reality shows, I don't know why I'm going off on these tangents, but if you look at exactly what they did, it is one of the most impressive things I've ever seen in my entire life. They built a multi-billion-dollar industry just off of social media. They're a media company. That's what they are. So if you ever ask yourself, hey, why are they so successful and they shouldn't be successful? The fuck they shouldn't. Absolutely they should, because they're amazing. They created their own family media company. But let's get on with this loan program. Gift funds. You're going to hear about this a lot too whenever you go to any place. Gift funds is just like if somebody's giving you money. We accept it and we go ahead from there. Appraisals are a son of a bitch. Not going to go too much in depth with it. It's just how much the house is worth. We're going to talk about appraisal gaps. Appraisal gaps is this. Now, just so you also know, there is a minimum. It's going to be $150,000. $150,000, and $150,000 is the minimum loan you could ask for. So, if you have any other questions, hopefully this content helped you out. Hopefully I helped you out in some way, somehow, or whatever. But if you want to go ahead and get pre-approved, link in the description below. DM me, email me, call me, whatever you want to do. I'll go ahead and help you out as much as I can. Sorry, most of this was in the car, but the weather here in the valley right now is absolute garbage. It's shit. It sucks. But we also review tacos for up to 50% commission rebate. And for taco reviews, just check us out. I'm actually going to go grab a taco right now. If you want, you could stick along this video. I'm gonna go do one. You made it this far. Let's go watch me eat a taco, I guess. Shit, imagine if I was one of those Kardashian chicks as a broker, as a mortgage broker. Jesus Christ, I would have. It wouldn't have been a $2 billion family. It would have been like a $10 billion family. God damn it. Let's go get a taco. Hopefully this helped. Like, subscribe, comment, do all of that stuff. If you have any questions, of course, hit me up. Let me know. But let's go grab a taco. Appreciate you watching it. If you want to dip, go ahead and dip. If you don't, let's go grab a taco and get the hell out of here. Alright, taco review time. So I'm not gonna lie, this is one of the most impressive things that I've ever seen in my entire life, okay? So they literally, this is on the side of the street,
in front of Walgreens. Like, if you look around, I'm gonna show you. These guys set up a whole restaurant right on the sidewalk at like almost like a kind of like a bus stop. So they have pastor on a fire spit. They have a grill on the other side. Now, I'm actually a little bit sad that I'm not actually gonna try all of this, but as everybody knows, we review the tacos. We have a taco. They told me to go ahead and grab these two sauces right here. We have this orange sauce that they have. He said it's pretty spicy. And then this green salsa, because you know what? I just like the salsa in itself. And then they have the accoutrement of whatever you want to go ahead and call it. But all in all, like, to watch these guys build this whole entire makeshift restaurant from scratch is nothing shy of actually just amazing. You know, usually you just come in, you eat, you just like whatever, but this one is actually located at 20901 Devonshire Street in Chatsworth, California. It is called, now this one is actually called Los Palomas. They have a total of 7 locations, which I'll go ahead and put all the locations down there, but let's just dive into it. So you guys already know there's 3 criteria for finding the best taco, and that's what we're searching for. We are in the search of the best taco in all of the LA, San Diego, and even the Bay Area, which will eventually make it up there. But for now, we're just gonna go ahead and stick to the LA area. So this is in the Valley. Now, we already know that we have the tortilla. The tortilla has to be nice and crispy, but yet a little bit fluffy inside. The meat has to be tender, and it has to have a little bit of flavor. And then, of course, the freshness of the vegetation that goes on top of it. Now, let's get the first bite in and see what's going on. Now, right out the gate, the tortilla on this place is nice and crispy. It's not handmade. Now that's the one that we always look for. We always look for the handmade tortilla. It's not handmade, but it's made really, 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 really well. Next, let's go ahead and pop the hot sauce on here. Let's see what's going on. So this is the orange salsa that they told me to go ahead and get. He said it was his favorite. I'm gonna go ahead and get this one. Holy shit, you gotta be careful with that orange one. This is a habanero salsa. Immediate kick right in the front of the gate. Burning the shit out of my mouth, but man, is that delicious. And then I grabbed this because I saw this lady grabbing this other salsa, and they were like, you know what, you should grab that one too. And you have this green salsa. Without a doubt, one of the best tacos I've had in the whole Valley area. This is an 8.6 taco. They would have gotten the 9s if it was handmade tortilla, but this, without a doubt, one of the most amazing tacos I've had around here. 8.6, Los Palomas, Devonshire, in Chatsworth, California. Come check these guys out. I'm really sad that I didn't get to try the other ones, because the other tacos, they look amazing. But this is the business. And for up to 50% commission rebate, and for any mortgage assistance, link in the description below. I'm gonna go ahead and grab 10 more of these, because this is what you do. You go and eat like 10 of these tacos. Holy shit, that is delicious. I'm like an animal here. I'm like a savage. Los Palomas, Chatsworth. Link in the description below. Come check these guys out. This is worth a drive. To come and have this, I think I told 7 locations, so you could go check out any one of them. Amazing taco. These guys did a great, great freaking job.